Welcome back. NCC is the stock on our radar today. Reported a decent set of Q2 numbers. Revenue surged nearly 40%. Margins contracted sharply on a YY basis. Company during its conference call indicated they will maintain FY24 guidance. But what is that guidance and what is the outlook going forward? Because Q2 was also impacted because of certain costs, around 200 crore rupees of one-off costs. So let's understand what they really are and what the outlook is going forward. Neerad Sharma, who is the head of strategy at NCC, is joining us now. Mr. Sharma, good afternoon. Thank you so much for joining us. You talk about a strong order inflow in Q2, like FY23. But is there an upside risk to FY24 targets, which is a 20,000 crore of order inflow guidance and 20% plus revenue growth? Because you do talk about second half being stronger, there are elections as well. Can you give us a sense of what is order inflow looking like and whether you will actually exceed the targets that you have already given us?
Very good afternoon to you and your viewers. At the very outset, the order book guidance that we have shared with the street is 26,000 crore. And as we speak, end of September end, we have already booked more than 20,000 crore order. So that is 20,794 crore to be accurate, which is about 79 to 80% of the guidance that we have shared with the street. The second guidance that we have shared with you is a revenue growth of 20%, for this fiscal. For the first 6 months of this fiscal year, we have already achieved, about 30% growth. So we are pretty confident to achieve this number of 20% revenue growth.
Okay, but Mr. Sharma, thanks for joining us. This is Pavithra. Like you were pointing out, you've already achieved 80% of your guided order inflow, right? Do you think that there's a good chance of beating that? Would you like to revise that guidance upwards? Because, I mean, by this point, you've already achieved 80% of that level.
Yeah, but why to shift the goalpost, midway? We are already in the game. All that we have done is we have crossed, the half line. So we do
but
not,
Mr. Sharma, you can't deliberately miss the goalpost. You know you're already going to hit it.
Yeah, but it is always, better to talk about a number, do not keep changing the number quarter to quarter and then surpass that number, that really gives us, good visibility to the market participants. So why to keep changing it, why to, let us say that theoretically, we decide to increase that by 10-15%. Again, next quarter, the same question would come. So I think it is better to stick to that number and surpass that number, hopefully.
Okay, it would just make your shareholders happier if you do that. But those things apart, Mr. Sharma, I wanted to understand what the margin picture is also looking like. This time, there were a lot of one-off costs that you spoke about. X of that, what is the margin looking like? And if you can talk about margins being stable versus FY23 levels, what is the raw material picture and your working capital as well? It has reduced. Will you see further improvement there as well?
We hope so. We hope so. Firstly, for this fiscal year, the margin guidance that we have shared with the street is, upside of the 10% EBITDA margin. And for the first 6 months of this financial year, we have already achieved about 110 basis point margin improvement if we compare that number with the last 6 months. So we are comfortably placed, and as we speak, we are quite hopeful of, hitting that number.
Okay, hopeful of hitting that number on the margins. Mr. Sharma, another part that we want to talk to you about is the Sembcorp case. We did speak to NCC, when the judgment first did come out of that 200 crores, which is receivable, but there was contention about the remaining 400. So what is the latest on that? Are you looking to appeal that?
It is it's little premature really to talk about a possible course of action that we will decide. But during the course of last conversation, I already shared with you the fact that there is a window of about 3 months to each party to file an appeal. So we are in the process of studying the judgment. We have already consulted some of the top minds from this field, and once we get an opinion from them, then only I shall be in a position to talk about our next course of action. So it is really give us a couple of months time then I should be happy to, come to your show and talk about what is it that we intend to do.
Okay, but you still have to receive around 200 crore rupees on this, right?
Yeah, that's the first question that was about, this difference. So as a conservative accounting practice, what we have done is we have already made these adjustments in our books of accounts, in this quarter. So that is the reason the EBITDA margin, that we have declared looks little on the lower side. But if you really take into account this adjustment, it is about 110%, more than our last 6 months number.
Okay. Okay, all right, Mr. Sharma, thank you so much for joining us and giving us all those details. So that's the word coming in from NCC. They are on track to achieve their guidance, and maybe they would actually exceed it in this fiscal year as well. We'll slip into a short break now. As we do that, here's some exciting news. You can now find CNBC-TV18 on WhatsApp, the best of market, business, economy, and global news truly at your fingertips. You can add the CNBC-TV18 channel on WhatsApp by following a few simple steps. First, make sure you have the latest version of WhatsApp. Go to the App Store or Play Store to make sure your WhatsApp is updated. Then go to Updates. You will find a button for channel. Search for CNBC-TV18 and hit subscribe. You will get all the necessary updates right on your WhatsApp feed. You can also you can catch CNBC-TV18 on all other social media platforms, including Facebook, X, Threads, Instagram, YouTube, and JioCinema.